Welcome to the Move IQ podcast and the First Home Focus series. We're dedicated to offering bespoke advice and guidance to aspiring first-time buyers. Now, working out if you can afford a mortgage is essential, but how do you do that? Well, today we're joined by Umera from Skipton Building Society to break down the how-to approach. This is to ensure that you get the most suitable mortgage for you. Umera, welcome. Can we talk about, the importance of being aware what you can afford before you go out house hunting? Because I meet too many people who don't do that. It's absolutely vital, isn't it?
Thanks, Phil. Of course it is. Absolutely. I say it's super important to work backwards. Okay. If you can understand what your affordability allows you to even look at as in terms of a property, it means that you're being realistic, right? So in that space, if you start working backwards to understand what your affordability is, to then start looking at what your budget allows in the area that you want to buy as well, right? Because some first-time buyers like to move out of the area that they're in at the moment. So have a look at the area, research that, see what fits into your budget. That then removes a lot of the properties outside of your budget and without getting fixated on something that really couldn't or might not be a reality.
I do meet, even nowadays, too many people who go out shopping, for want of a better word, without knowing what their budget is. And you're just setting yourself up for disappointment.
Agreed, absolutely. And I probably shouldn't do this, but I compare it sometimes to buying a car, right? If you know what your affordability is, you will be looking at cars that are specific in that. It's really similar when you start looking at houses. If you're looking at a house and you become fixated with a property, that then turns out is not in your budget.
How disappointing is that?
Exactly. Yeah. And then sometimes it removes the excitement from the experience that you're supposed to be having as a first-time buyer. Yeah. So work backwards, understand realistically what your affordability is, set yourself a budget, have a look at what's in the area that you're looking to buy and stay in that.
And it all kind of gradually takes shape. Exactly. But it is a process that people need to go through.
Yeah, and it's important to enjoy the process.
I've always said house hunting should be it's the biggest shopping experience of your life. But you do need to be prepared and organised and have your kind of wits about you.
Absolutely.
The first thing, of course, is saving for a deposit, because you can't go shopping until you've got that bit.
Agreed.
How do you do that?
Good. So if you can determine what your affordability is, right, that then will give you an idea of how much you need to save. So that's a sort of starting point, isn't it? What is the goal? What are we trying to achieve? How much are we trying to achieve? And then in order to get to that achievement or that goal, you would then realistically look at your circumstances. So for example, if you are renting, explore the option of potentially downsizing if you can. Yep. If you're fortunate to have family and friends around you that you can move in with, absolutely have a look at that option. I think it sounds a little bit obvious to say, but have a clear goal on what you're actually saving up for. What will help with that is what we call a lifetime ISA. A lifetime ISA is a great way to kind of give you some structure on your savings. You're able to save up to £4,000 per year tax-free in a lifetime ISA. And then because it's government backed, it means that you can get a government contribution on top of that, up to 25%, and that's up to £1,000 per year.
You're a big fan of those, aren't you?
I am, absolutely. I think it's a no-brainer, I'm just going to be honest with you. And it really surprises me how many first-time buyers don't know that this is available to them.
The lifetime ISA.
Absolutely. A lifetime ISA. And it goes hand in hand with what we're talking about. Setting yourself a clear goal, having a structure, gives you some discipline on that saving side of things, with the view of being able to buy your first home in the first instance. And outside of that, as we've talked about, things like non-essential expenditures. So what have you got going out that you can maybe just strip down and start plugging into that ISA? And all of that will definitely help you save quicker to get into your first home.
And when it comes to choosing a mortgage provider, what should buyers be thinking about?
Yeah, I think this is one that most first-time buyers actually struggle with. Where do you start, right? Because there's so many options out there. I think a good place to start would be is a lender that you might already have a relationship with. So who do you bank with? Because that bank or building society would be familiar with you, you're familiar with them, as an example. Yeah. Outside of that, most people have family or friends that have either gone through the process recently or currently going through the process. Do some research. And then what you will find is in your local kind of area, geographical area, you'll have what we call mortgage brokers. That's another really great place to start. And what the good thing is about a broker is you can have a sort of no obligations initial chat with the broker to really get an idea and understanding of where to go from there.
And they will be able to access the whole market?
Exactly, yeah. So they will have access to a panel of lenders.
Okay.
So where you might, for example, struggle to pick one particular lender, they would have access to lots of different lenders. They will be really familiar with their criteria.
Okay.
And after an initial chat with you, they might get a good idea as actually, I think this lender might be the right one for you. And eventually they can make a recommendation for the type of mortgage as well. So it's a great place to start.
And let's imagine that you're up and running, you've chosen your mortgage, you bought your house.
In an ideal world.
In an ideal world, it all went smoothly. Do you have any recommendations on how to manage your ongoing expenses?
Yeah, definitely. We talked a little bit about things like stripping out your non-essential expenditures. So planning ahead is really important. Being a little bit savvier than you might have been before this, because now you're a homeowner, like you mentioned earlier. It's one of the biggest commitments that someone would take out, right?
Yeah.
So really have a structure to your income and expenditures. And everybody's different. Every household is different. Depending on the stability of your income that's coming in versus what's going out, managing your monthly mortgage payments on a monthly basis over a long period of time is one that people don't take into consideration until they've actually moved in.
Yeah,
right.
By which time it's a bit late.
Exactly. And then what you do have is you run the risk of the property being repossessed ultimately if you can't keep up with your mortgage payments.
Major trauma at that
point. Absolutely.
What should first-time buyers really know about interest rates?
Good question, Phil. I think it's important to understand what type of interest rate or what type of product you're getting yourself into. So as an example, if you're looking at a fixed rate, what does that really mean? It means that your mortgage payments would stay the same only for a period of time. So you're getting stability off the back of that. It gives you the chance to plan and gives you some structure. And then outside of that, other types of interest rates that a first-time buyer might be looking at is a variable rate, as an example. So it's key to understand what the differences are between the two and what you're getting yourself into.
Got it. When first-time buyers are approaching this, they will see the term LTV, lots, loan to value. Can you just sort of generally talk a bit about that?
Yeah, definitely. So as you've touched on there, LTV, what it stands for is loan to value. And if I was to kind of try and break it down as simple as possible, it's the size of your loan against the value of the property that you're looking to buy. And that then spits out a percentage, right? And that percentage is a reflection of how much you will own the property and how much the lender will own the property. And that then gives you some idea of what interest rates you might be eligible for and also feeds into the risk for the lender as well.
So the lower loan to value,
correct,
the better it is for the borrower.
Exactly.
Got it. And how can buyers improve their credit rating in the eyes of a lender?
Good question. I mean, register on the voters roll. I think that sounds like a really obvious one, but it isn't for a lot of people. You'd be surprised. I would encourage that you 100% seek to register on the voters roll, because that will have a direct impact on your credit score and overall kind of credit history as well. Aside that, keep up with your financial commitments. If you have got any debts that are showing up in your credit report, it's really important to manage your payments effectively. Try not to take out any new debts, okay? And lenders will also assess what we call a debt to mortgage ratio. So keep your debts on your credit report manageable.
And if the worst happens and you're unable to keep up with those repayments, what are the consequences of that happening?
I mean, as sad as it is, the reality is the property that you have worked so hard to get into could be repossessed by the lender if you were unable to keep with your monthly mortgage payments. But I think for me, it's really important to highlight at this point, it's not something that will happen overnight. Okay, most lenders have what we call a specialist team who will work with you to try and support in the first instance and really get to understand why we are where we are. So why are we in a space where you are unable to keep up with your mortgage payments? What's happening in your life? What is it that's changed to kind of get you here?
So if something has changed, then best advice is to actually get on the front foot and contact your lender and let them know and have a discussion.
Yeah, I agree. It's easy to shy away from that conversation if you're in a situation, and I've spoken to many people over the years who have got themselves in a situation and feel much better after speaking to the lender in the first instance, because lenders want to work with you. They also have an interest in the property that you're in, right?
Yes.
So they want to work with you to do that.
Any final thoughts for our listeners?
Be realistic in your budget, and the way to do that is to find out what your affordability is. A great tool to use to try and ensure that you've got the right affordability is to use what we call an affordability calculator. Most lenders have this available on their website, which is a really interesting tool to use and get a realistic idea of what you can afford. Speak to an expert, because they'll know more than an average first-time buyer does, right?
Yep.
And if you can, get a lifetime ISA.
And save.
Absolutely.
Save.
Yeah.
That's what it's all about.
Yeah.
Good to talk to you. Thank you.
Thanks, Phil.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.